Good morning. This is Larry McMillan with the stock market update on Monday, September 8th. So, pretty much everything's still staying the same. Market seems to be on hold as it's waiting for next week's FOMC meeting, expecting the Fed to lower rates. Sometimes, it's sell on the news, so we'll see what happens after that. But right now, the S&P chart is still positive. It made a new all-time high a couple of times recently, most recently Friday in the morning before there was some selling. But any selling has been contained. There's support in the 63.40 to the 63.60 area, and then below that as well. So the S&P chart is positive, and that's really the most important indicator is the chart of the S&P itself. Beyond that, we're seeing some improvement in the equity-only put-call ratios. There's still put buying going on in accompanying the stock buying, but it's sort of waning now. And so the equity only put call ratios are now back on buy signals for the stock market. I can't say the same thing for breadth, though. The breadth of the market has not been great. Last couple of days it's been okay. But the breadth oscillators, typically you'd like to see them be really quite overbought as the S&P is making new all-time highs. And that has not been the case. So the breadth oscillators are flirting with sell signals back and forth. And so eventually, this is probably not a good thing that breadth is not accompanying this market, but it's not an immediate, reason to run out and start selling stocks either. The new highs versus new lows, that's staying very bullish. There are over 200 stocks making new highs on Friday on the New York Stock Exchange. We're seeing some bearishness from the realized volatility, but implied volatility has been really very bullish. VIX has stayed low, and maybe some people think it's too low, which is a danger sign of sorts, but it really just means the market's overbought, and that's not that surprising if it's at a new all-time high. The danger would be if VIX were to start to rise above its 200-day moving average. That 200-day moving average right now is right around 19. But beyond that, we're seeing VIX really sort of trending down, and that's bullish for stocks. So the construct of volatility derivatives is another bullish area. The term structures of the VIX futures are sloping upwards, and the premium on the VIX futures is quite large. So all in all, we've got mostly positive indicators, not 100% positive, but mostly positive. And so we're retaining a bullish attitude. Obviously, we're paying attention to these things on a daily basis. I invite you to visit our website, take a look at some of our daily letters, if that's of interest to you. And meanwhile, have a great week trading.